And now let's get more on the markets as the RBA surprises traders with another hike, raising its cash rate to 4.1%, the highest since April 2012. So what will this mean for other central banks going forward? Well, joining us now is Adrian Durham, the founder and chief executive officer of FNZ. Adrian, thank you so much for joining us. Now, we link central banks to what you do because, of course, everything changes when interest rates go up for financial services. Yep. First of all, how do you see this ever-evolving interest rate hikes, ever-evolving technology and change in operations impacting the way we bank and manage our assets?
Yeah, sure. So I think the trend that we really see in financial services today is about, and particularly in wealth management where we operate, is about ever-increasing personalisation of these services. Mm-hmm. It's all about me, how I achieve my goals, and how I can have a solution tailored specifically for me, which I think is something we've seen in many other industries over the last 20 years, but which has just come to the sector. And I think that's directly relevant in a world where inflation is higher. You know, people have more challenging goals and they need more challenging solutions to achieve those, and it's all about personalisation.
Adrian, you have an amazing story because you founded, this company FNZ, and it's amazing the growth trajectory that you've seen. And now you're launching more products and also partnering with some banks. What surprised you the most in this journey to wealth management?
Yeah, I think so. Wealth management is an extremely complex industry, which I think is why it's taken longer for the impact of technology to really translate into a benefit to the consumer. But the approach we've taken is very much to partner on a B2B basis with suppliers of wealth manager, take over their back office, move it onto a modern technology platform and serve it back to them in a way which really lets them focus on their customers, personalising, digitising and having transparent and fair services, which I think,
So this, I mean, I find this fascinating, and it's really an amazing story in the number of accounts you've been able to open. It's basically commoditizing the back office so that individual banks can give that premium service to their clients. Is that the way the industry will continue going as a whole?
Exactly. So, you know, as a consumer in this space, I care about how my money is invested. I care about the advice I receive and the trust I have with my advisor. Everything else kind of needs to fade into the background, and that's where technology and automation and extreme automation of these processes can really enable the things which matter to be the focus of those in the sector, and so that's absolutely what it's about.
So I guess the difficulty is, do you get disrupted by AI? We're trying to figure out exactly what AI means for markets and the way things are open, even for example bank accounts.
Yeah, I think. I don't think we necessarily get disrupted by AI, but it's an enormous benefit in terms of us enabling us to take automation to the next level. The more and more we can take complex processes, scale them, require less people. I think AI is a key enabler of that, and a technology that we deploy already to take automation to the next level.
And again, what's amazing is that you come from a really privileged position of understanding what wealth managers are doing right and doing wrong. Are we expecting consolidation phase? Already it started, but if you don't have a good value proposition and you're basically opening the accounts for them, like, will they have to merge?
I think we actually don't. We support a model which is not necessarily consolidated. If we take all the pain away of not just opening accounts, but funding those accounts, investing those, providing the reporting and managing all the regulation, then that enables a model which either operates at a lot of scale, and we have a lot of customers, very large scale global banks, but also enables the independent model, which actually has been the general trend for a long time. So I think it supports both ends of the scale spectrum, and and means actually you don't necessarily need to consolidate, at least as a provider of financial advice, in order to provide an efficient, cost-effective and personalised service for your customers.
I know you've partnered, for example, with Virgin Money to deliver an app for retail investors. You're expecting a lot more of these apps. Like, where are you seeing growth in terms of business model, but also what you're working on?
Yeah, we definitely enable and are excited about this world where we can, enable people to connect directly in a more accessible way with their financial goals and their wealth, and do that through technology and apps. And in our case, enabling that through partnerships with people like Virgin, trusted brands. And I think that's very much what drives our B2B model, very much drives much better model of delivery of services to consumers. I think we should also, wealth management is complex, and so a lot of people are still going to solve this problem, in combination of apps with people and trusted advisors, because the complexity is high, and ultimately that's a problem which is solved by a trusted relationship.
And I guess that also changes with interest rate rising. Does it impact your world?
I think interest rates rise, but inflation has risen as well. So real investment returns are still not that different to what they've always been, which means over the long term, people are going to still invest in growth assets and benefit from growth assets. And so it's just as important as ever for us to provide services which enable people to save regularly, and to take risk. And so I don't see that fundamentally changing, except over the very short term when things change quickly.
Adrian, you're also one of the most interesting. I mean, you're a founder and chief executive in a fast-growing company that's doing very well. Like longer term, what's your plan for the company? Would you ever sell?
I think we've just. We built a very successful business in the UK. We've expanded that internationally, and just recently into the US market, which is the largest scale wealth management market by multiple. And so we're very focused on executing that growth. We've made a lot of progress, and so executing that, which I think is a multi-year story for us, still is very much our top priority, rather than thinking about any other potential future liquidity event. I think we're actually just at the relatively early stages of what we can grow this business into.
Is the US harder than the UK?
It's actually, I think, is fundamentally the same set of challenges. Very dated technology infrastructure that, in this technology-enabled way, has an adverse impact on the customer experience. So I think the opportunity in the US for us is exactly the same as what has helped us to prosper and be successful here and in Europe. And so we're very excited about that. And when you have a business in one country and you can apply it successfully to many others with effectively the same solution and the same the same benefits, that's very exciting.
So Adrian, apart from market share, what's your biggest challenge that you have to get right? Is it how you process data, or some of the data centers?
I think actually, in this space, it's if you have a successful business model and proposition, which we do, it always comes down to execution and sort of day in, day out execution, and in our case, managing that across 26 different countries. That's where the complexity and the challenge lies, and that's where we focus.
Okay, wonderful to have you on. Thank you so much.
Thank you very much for your time.
Adrian, I'm sure we'll interview you again.
Awesome.
Breaking news, Adrian Durham, the FNZ's founder and chief executive officer.